with you Twitter stock. Just type it in Google, press enter. You can see Twitter here. Twitter is the name, Twitter Inc., and it's TWTR is the symbol, and then it's 41.53 US dollars for one stock. It's a billion size firm, it's a big size firm, and it's not paying any dividend. So I just want to point out any firm that is paying dividend, that means they're financially very strong because after paying their loans, liabilities, creditors, they still have extra money. That extra money it pays to shareholders as dividends. If a firm is not paying dividend, it could be that they're financially weak, or it could be they are financially strong, but they choose to reinvest in their own firm to further expand. So there could be many reasons for not paying dividend. So, but you need to find out what are the reasons. So that's very important. And secondly, it was founded in 2006. You can also click on Wikipedia, just find this box, and you can see when was this founded, 13 years ago. Simple as that. Now let's go to Twitter. I'll just copy that exactly from here. Type Indeed reviews. I want to know what the employees think about this. So I'll go to Twitter. I can see 75 reviews, 4-star. Read through the reviews yourself. Check out the salaries they're giving, the jobs that are listed, and please check the reviews in Glassdoor as well, which is also a brilliant website for reviews. And I can see that we have 873 reviews, 3.9 star. Please read through the reviews, and please check out the jobs listed, the salaries they're paying, the interview questions, the benefits they're getting, the photos they have, and please check in Just Your Patents. Check out the patents as well. Paste it here, click enter, and I just want to point out that please look at assignee or applicant because these are people who have the full rights of the patent. It has patent 2013, 2016, which is a recent patent. That's brilliant because not only does a firm need to have a patent, but they need to have recent patents in 2015, 16, 17, 18, because that means they're still innovating, which is important for a firm to survive. So they do have recent patent in 2016. They have a patent in 2014. That's brilliant. So they have a lot of patents. So that means they're very strong because it's difficult to beat a firm that has a lot of patents. They have a patent in 2016 again, a patent 15. That's a brilliant 2017, which is a recent patent. So they're innovating recently as well. That's brilliant. So go through the patents yourself. Check out the other pages as well. And let's go to Yahoo Finance, and I want to see what the key executive, who the key executives are, and what salaries are they getting. So I'll just paste it exactly. Click on the symbol and go to profile, and you will see the sector. You can see the sector, industry, and the employees here, and I can see 5 key executives, but 3 of their salaries have been shown. So 2 it says not applicable, which is not what I want because I need to know all the salaries of the key executives for it to be transparent for me to trust this firm. So it says not applicable. So you need to find out why it's not applicable. That's very important for us to know. So you need to do that research, okay? So now, lastly, I'll go to macro trend. I want to check some important ratios. Go to price ratio, price book ratio, and you can just type in Twitter. And if the price book ratio is less than 1, that means stock is very cheap. It's a discount, it's a sale. If it's more than 1, that means stock is expensive. The higher the number goes, the more expensive it will get. So it's just loading right now. Let's see. Please let me know if you have any questions for me, or if you would like me to make a video or do research on a particular stock that you're researching right now. I'll do it for you. Or if you would like to connect with me, please let me know as well. Please be patient with this website because this website has a lot of data, so it takes time to load, and it's still loading right now, but once it's loaded it will make your life quite easy. So you might have to wait for a minute or two for things to load on this website, but please don't worry, be patient. Okay, so I can see that right now it's 3.84, which means if somebody buys right now, they'll be paying 3.84 times more money. It's 3.84 times more expensive right now. Somebody who bought in 2018 June, they paid 5.9 times more money. They paid $43 to buy something that was $7 worth. So they bought it very expensive. Right now it's 3.8 times more expensive. It was most expensive in 2013 December when it was 12 times more expensive because people paid $63 to buy something that was $5 worth. So, you need to be careful regarding that. And let's go to other ratios. And I want to see current ratio. If current ratio is less than 1, that means stock is risky because liabilities are more than assets. If current ratio is 1.5 or more than that, that means stock is safe. It has a good margin of safety. Please look for 1.5 or more than that. Right now, it's more than 1.5. That's brilliant. That means stock is very, very safe. Let's look at the previous ratio. Has it ever been below 1.5? That's my question. Since 2011 December up till now, consistently it has been 1.5 or more than that. That means stock is very, very safe. That's brilliant. Let's go to debt equity ratio. I'm looking for zero point 0.5 or less than that for it to be very safe. This ratio will tell me if the stock is mainly operating on debt or equity. Let's have a look. Right now, I can see that I'm looking for zero point 0.5 or less than that. I can see it's less than zero point 0.5. That's brilliant. It's a safe stock. Let's look at the previous trend. Has it ever been zero point 0.5 or more than that? I can see that since 2013 December, consistently for consistent recent 6 years, it has been less than zero point 0.5. So which means it's a very safe stock in terms of debt. That's brilliant. Let's go to return on equity. I'm looking for 8% or more than that for it to be brilliant. Let's have a look.